I would just load up a little bit more on small. Mid cap is like one of the worst performing asset classes. Jeff writes in from Kentucky. He goes, hello all. I started listening to you guys a few weeks ago after a friend recommended the show. Very grateful for what you're doing.
Oh. Nice. Thank you for the recommendation nice. From the friend.
Nice little recommendation. I'm 42, drive a 2019 GMC Canyon. Enjoy Yuengling. What the hell is that called again?
Listeners have called it Yuengling.
Yuengling.
I can't help you on that. That's a complete mystery to me.
Yuengling. After work. I'll throw down some Yuenglings.
Let's try it tonight.
Yes. No pets at this time. Got a couple of questions regarding my sponsor's retirement plan that I'd love your take on. My lovely wife is employed at a large university and has a TIAA for her retirement plan. On the other hand, I have Vanguard and love the choices of the low-cost index funds. Need to bounce some ideas off you regarding her fund choices. There is nothing equivalent to a total market fund. So she's dividing equities between growth and value, large and mid, small, international. Most expense ratios are about 0.3, but mid caps are around 0.77. Question number one. Are these mid cap funds necessary for a balanced portfolio, or could we go the large cap, small cap, international route for the equity portion? You want to just answer that real quick?
You could.
Yeah, I would. I would not invest in mid cap because I would just load up a little bit more on small. Mid cap is like one of the worst performing asset classes.
Well, yeah, there's not a lot of point in it. Small tends to outperform large, but it's more volatile, right? So, but over the long term, so it's nice to have small. If and we talked about this before a couple segments ago. Is getting diversification is great. Now, in certain cases, you're limited to the funds allowed by the plan, right? And if the choices are too expensive, like maybe mid cap, it's not horrible, 0.77, but it's not great. It's not like what you'd like to see, closer to 0.1 or 0.2 or 0.05 maybe.
But I'm saying, me personally, I do not own any mid cap.
You don't?
No. I mean, it turns into mid cap. The small caps turn into mid cap, and then it flows into large cap.
Yeah, but don't you've got some total stock market funds that have mid cap?
Yeah, but I don't have a mid cap fund.
Gotcha.
And if I had an option to invest in a mid cap fund, which I do, I would not do it.
Got it. Okay. I guess I agree with that because large companies are more stable, right? And so you kind of like to have plenty of those. The smaller ones have a little bit more rate of return, although it doesn't show up every year and it's more volatile.
Those are a little more hot.
Yeah, a little more hot, right. But it kind of increases the return over time.
Yeah, little juice,
Yeah, mid caps are probably somewhere between. Yeah, I sort of tend to agree. Mid caps are probably less important in this mix. Yep. I like having growth and value. I like having small and large, and I like having international. So there you go.
There you go. I agree 100%. All right. Question 2. Do you like real estate in retirement portfolios? We have no real estate outside our primary residence. If so, what are your thoughts on the TIAA Real Estate versus TIAA Real Estate Fund, the TRRSX? It appears that TIAA Real Estate is some sort of variable annuity, and year-to-date return is 11.05 compared to negative 27.2 on the TRSX. I'm going to take a stab. I'm guessing that the TIAA Real Estate is probably is like a true REIT, like a private REIT that is investing directly into real estate, where the real estate fund, the TIAA Real Estate Fund, TRRSX, sometimes they invest in real estate type companies. So they might invest in REITs, they might invest in other types of companies that are in the real estate, in the business of real estate. So those are going to be more volatile. Right. So, but the real estate fund, I have no idea what they're investing in. I would it's probably a direct investment into real estate is my guess.
Yeah. And I'm not sure either. I'll answer this broadly. I do like to have some real estate exposure. Even in my portfolio, I have rental properties as well, but I do like some real estate exposure because my rental properties are individual homes, right? Or condos. And when I have real estate exposure, I'm getting commercial and maybe apartment buildings, maybe office buildings, maybe in different locations around the country. Real estate is an asset class, right? And sometimes it outperforms other ones and sometimes it doesn't. So I do like that, but I tend to like the liquid real estate investment trust that you can get in and out of on a daily basis if you need to. We're not really experts at these two funds, so we can't really advise you on that. But yeah, I mean, the basic answer for me is yes, I do like to have some real estate in the retirement accounts or non-retirement accounts, because it's just another asset class that can work well with your other asset classes.
What's the holdings there?
It's 98% stocks. It's got Prologis, American Tower REIT, Simon Property Group, Avalon Bay Communities, Equity Residential, Rexford Industrial Realty, Equinix, Public Storage, Sun Communities, and Crown Castle, et cetera, et cetera.
Yeah, so right, they're buying stocks that are going to be a lot more volatile. And the TIAA real estate is probably a direct investment into real estate. So, TIAA is an insurance company, just FYI. So anything that you purchase within TIAA is inside a shell of an annuity, which is not good or bad. It's just that's the 403B provider. So if you want to get into the TIAA real estate, I would probably do that versus the TIAA real estate fund, because but you have to check the liquidity. Depending on, can you buy and sell it? Are you is it illiquid or is it liquid? Is probably the only thing that you have to look at. But so anyway, last question this guy has, or Jeff has. I'm sorry, I shouldn't call him this guy. He's Jeff from Kentucky.
Wait, yeah, we know him.
Yeah,
Jeff.
Last question regarding annuities. Oh, I just talked about that. I know most of the time they aren't the best choices, but TIAA Traditional is a little different to my understanding. In our mandatory DCP, her illiquid portion has a guaranteed rate of 3% plus an additional 1.146 for a total of 4.146. The total liquid portion in a 403B and 457 is around 3.4%. Do you like this fund instead of bonds? What about the mixture of both? My understanding is the liquid portion could be reallocated at any time, and the illiquid could be moved over 10 years or something like that if we don't choose to annuitize. Sound right? Sorry for the last question turned into a couple. Thanks again for looking forward to your spitball. Yeah, the TIAA portion of the TIAA CREF is a fixed account that is totally illiquid. So you get a premium for the illiquidity. So you can't move the money out. You can only take 10% out per year. It's going to give you a little bit higher rate of return. So if you ever try to move the money out of TIAA, move it into your own additional, traditional IRA, it's going to be hard to consolidate. So that's one negative, but it is going to give you a little bit higher premium or higher rate of return. So I do like that fund a lot over bonds. But bonds are going to come back, right? So versus going into a fixed account, I would want a little bit more liquidity. Again, depending on what my overall goals are. And if you're going to annuitize, then go into the TIAA. If not, I would probably just do a little bit of balance of both.
Are you prepared for retirement? Schedule a free financial assessment with an experienced financial professional right online at purefinancial.com.